Welcome to my daily review. Today is Tuesday, May 14th, and we had a significant day today. Some folks were asking me if we had a follow-through day. I think we already had them, but it doesn't matter. I just wanted to point out one thing here is that the Nasdaq made that high of 16,538 back in March 21, and then it pulled back 9%. After the 32% run, it made that high, pulled back 9%, had an inside day, then started rallying. Okay, and it moved through its moving averages. And on this date right here, May 3rd, it traded up 2%. That was the jobs number day on that Friday. And it has been above the 21, which is this pink or magenta line. The low of the session has been above that 21 for 1, 2, 3, 4, 5, 6, 7, 8 days now. And today, the 21 EMA crossed above the 50. You could see just a tick there. And the 21 is 16,120 and the 50 is 098. So once today's day one above the 21 above the 50, and when we have 5 days of the 21 above the 50, and we have an up day with the low of the day above the 21, that starts our power trend. You could say, oh, we started already, but no, it still has work to do. And I would like to see it take out the 16,538, which it's only 28 points away here from taking out the old high. It came very close today and then pulled back. So that would be the next area of interest. As you can see, this little, cup shaped pattern. So maybe a pullback for a couple of days and a run higher, or maybe it just keeps going higher. But definitely, at 16,511 at close today, up 123 points. Excuse me, I should have said that from the jump. It was up 123 points or 0.75%, closed at 16,511. But I'm so excited about the 21 being above the 50. I forgot all that. Anyway, the volume was up today for all you volume people who give me a hard time about volume. So are you happy now? It's not a follow-through day because it was only up 0.75%, but for me, I mean, I think we had our follow-through day on this day right here where the Nasdaq was up 2% on the jobs number day. And the jobs number is a big deal because that's half of the Fed's equation. And with the jobs number starting to the unemployment data starting to weaken slightly, that makes the job of the Fed much easier. Anyway, I wanted to point out a couple other indexes, not just the Nasdaq that's seeing this 21 EMA cross above the 50. This is the S&P 500 index, which is up nearly 0.5% today. And closed at 5,246. But anyway, you could see the 21 just ticking. The green line is the 10, and it's been well above the 50 for a few sessions now. And today, the 21 traded above. You can see the 21 is a 5,148. And the 50 is 5,145. So just a tick above, but that's all it takes. And it has been above the low of the session has been above the 21 for 8 consecutive sessions. So that looks good as well. And the Dow Jones Industrial Average, I mean, it's only 30 stocks, right? So it's not real indicative of, an index, but 30 stocks that are, larger stocks, more well capitalized stocks. And, it's the same thing. The 21 crossed above the 50. And the last one I want to show you is the Midcap index, the Spiders Midcap 400. And same thing here. 1, 2, 3, 4, 5, 6, 7, 8 days with the low above the 21. And today the 21 ticked above 538 is more than 537. So the 21 is higher than the 50. And so we're just trending in the right direction. If you're a trend trader, this is exciting stuff. And we can make a lot of money in a market that goes, and this is the MDY, but from 424 to 558, yeah, we can make a ton of dough in that time. So I'm not saying it's going to do that again, but it is starting a new trend, and the trend is your friend until it bends at the end. So we'll just take it one day at a time. It hasn't started the power trend yet. This is Apple. had a nice response to its earnings report and has traded above the 200 and now is starting to show some strength, flex some muscle. The 10, the 21, the 50's turning up even. So this is looking a heck of a lot better, and it's just consolidating in a base from this 198, and it touched it again. You know, the double top people were crying, but Apple's looking better, and I wouldn't be surprised to see it get back up to that 200 level. In fact, I expect it to. Microsoft finally got above the 50. So yay for Microsoft, heading in the right direction, trending much like the index. Meta platform sold off with earnings, and it's just done nothing but rally back ever since from 414 to 471. Nice move for Meta. I mean, it's still below the 50, the 10 and the 21 and the 50 are curling lower, but you know, after a big move like that, it has rebounded nicely. So anyway, Amazon still forming that, you know, little short little base here that I kind of like the looks of Amazon here. 189, not for a massive move, but you know, back to 200. I would take that. Thank you very much. Amazon looks good. And then Google in the news, you know, Apple's in the news, and it's definitely helping the stocks. This one traded down to its 21 on Monday, bounced, and then today followed through with a decent move, 0.75%. We'll always take 0.75%. Don't you know, don't complain about that. As long as they're going up. Tesla, you know, made this big 37% move from you know, trough to peak, and then pulled back to its 50. Now it's, you know, lounging around near the 50, finding support, but it's got to trade through this downtrending 200. It's got a lot of work to do. And last of these large cap tech stocks is NVIDIA, just trading tight here. This is to be expected before earnings next Tuesday or Wednesday. The 22nd is Wednesday, I believe. So yeah, it's just trading real tight here, which is, you know, good. You know, you can see the moving averages are tight. The trading is tight. It undercut the 50 and has rallied back above. This looks like a real nice base. I'm not saying that NVIDIA is going to blast off with its earnings report, but I do expect good earnings. Maybe not triple digit every quarter, but they should be reporting strong earnings. And the comps are going to get tougher as the year goes along for NVIDIA. Anyway, Qualcomm, I'm going to go through some of the stocks here in the groups. I like groups. I like going over groups. I like stocks moving in groups. And so I'm going to go through some groups today. Qualcomm is in that semiconductor fabless group, the double bottom base. I had this on our ready list and was hoping that it'd pull back, but it never did. You know, it's just taking off now. So if you didn't get it here at the one on this date when it broke out, or the subsequent day when it pulled back, it's kind of moving away from us now. Yeah, it was 176 on the 8th, which was last Wednesday, and then it looks like the slight pullback. Oh, it's a flat day on Thursday, and then Friday, and then now Monday, Tuesday. It's just it's getting away from us. It looks good. Qualcomm looks good. So, and Applied Materials, another one that I put on our list. Now they have earnings this week. 16th is Thursday. So just be mindful of that. But this is consolidating in a base nicely. I would imagine, you know, this is an equipment stock. They should have good numbers as well. We're just gonna have to wait and see. Yeah, if you don't have a nice cushion in this, it's gonna be pretty hard to hold through earnings because it's a coin flip. Anyway, I'm gonna move away from the semiconductors and go to the data storage group, which, you know, I talk about them a lot lately because I like them, and it's a rebound play. And you can see the stocks rebounding with the earnings lines rebounding. This is Micron Technology, and up nearly 3% today, or excuse me, for the week, which has only been 2 days. But yeah, responding nicely here. Had the breakout on earnings, you know, made a new high, then pulled back, and now has regained its footing, stabilized and moving higher through its moving averages. So Micron looks fantastic. NTAP is another one on our ready list. You can see why this double bottom base pattern. Now it's just trading tight and flat. That looks really great to me. But who am I, right? It's only up 0.5%. It's going to do what it wants to do, but that double bottom base looks good to me. This group has been really strong, so I like the group, and I like some of these leading stocks within the group. This is Pure Storage, made the nice move following its most recent earnings and pulled back and formed this double bottom base. And now they have earnings again here on the 29th, in 2 weeks. Bust a move today of nearly 4%. So that thing, even though it made that big move, it's still within a buy area, I believe. And I'm going to move on from the data storage group to the data center group, which includes DELL, which has been on our ready list as well. And this thing just keeps grinding higher. This is not one of these fast movers. It just keeps grinding these higher lows here, like 104, 114, and it finds support and makes higher lows. Today bounced off its 10 EMA, which we saw a lot of stocks bounce off their 10. And if you have a stock that's bouncing off the 10, finding support there and trading higher, that's a strong stock. There's not a lot of them right now, but as the trend continues in the indexes, I'm sure we're going to see more and more. But DELL, definitely one of those strong stocks. Vertiv, another one that pulled back to its 10 EMA the last couple of sessions. And you can see, recently it's been getting support there, like right here, and now today down to the 10, got this hammer candle. That looks fantastic. Up more than 4% today. Let's take a look at the 5-minute. Yeah, just buying all day. I mean, just up, 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 up. I mean, if you bought calls here in the morning and sold them here in the afternoon, you had a good day with Vertiv Holdings. Nothing but buying, closed near the high of its daily range, which I should actually, since I brought it up, 96% of its daily range. So that's not bad. Yeah, Vertiv looks fantastic. Real strong stock. SMCI, this one, it was up, more than 5% today. It looks like a blip on the radar because it was up so much. It made such a big move, and now it's sold off a lot, and now it's just kind of trading sideways below the moving averages. I know, the stock's below the 50 is going to be resistance, but I just gotta believe these guys are going to be doing great business for quarter after quarter, and I'm going to keep an eye on this stock because it's shown the ability to move. Yeah, I know that looks like a climax top, but if they continue to deliver earnings and raise guidance, this is not an expensive stock at all. It's trading about what did they say, 15 billion at 48, so it's about 3 times sales. So, like I said, not real expensive. And the last one, this is an energy stock. I'm just going to throw it in there because energy, a lot of energy to run those data centers, and this is Constellation Energy. This one has been fantastic. One that I really like. Sterling is another one that just traded flat today. Nothing burger. PWR Quanta's come back nicely this week. Yeah, this one pulled back to the 21, so that is something to watch. I think if you look at the 5-minute chart, it was down quite a bit. Yeah, then during the middle of the session, some buyers came in today. This thing looks like it's starting to be a deal here at the 21, and it bounced. So good for Quanta. And then Eaton is another one, in the data center energy group, bounced off its 21 as well. So that looks pretty good. Okay, I'm going to go to so you can't call me a hater of all things mining or commodities. Southern Copper had on our ready list today, and it busted out 2.5%. Nice move, made a new high. Closed near the middle of its daily range. What was it? 65% of its daily range. So this thing looks like it wants higher prices to me. And if you're just looking at the lows, you can see that's 107, and every time it comes to the 21, it's finding support, making higher lows. Now, right now, today, it's too far extended, I think. It's 7% away from its above its 21. So let that 21 catch up a little bit and have this thing go sideways or come back a little bit. Because if you buy now, you're likely to be underwater when it does a normal pullback. This is Freeport Mac Moran. This one breaking out looks very similar to Southern Copper. Where it had this high, then pulled back, and now it's making just higher lows and higher highs. A new high today. Alcoa made a big move yesterday and then gave back, less than 1% today. That one looks good. And then TECK Resources, a new high today. And if you look at the weekly chart, you can see it just breaking out of the base. One thing I don't like is that earnings line headed south. So anyway, the one I like is Southern Copper out of those, but Freeport is looking good too. Okay, let's move on. I covered that area. And another area I don't really particularly like, I had OSCR on our ready list, 2 weeks ago or last week, and it, when it pulled back here within its base and just it's blasted off ever since. I don't think you can chase an insurance stock like that 20% above its 21 EMA. You're asking for trouble if you chase that. Aflac's got the duck. It's got Nick Saban and Deion Sanders. Aflac made a new high today, but still within a base. It's been consolidating for a long, long time. And that's kind of what it does. It's a slower move. You can see how many bases it's had here. A base, a base, a base, another base, a flat base, and another cup-shaped base with a flat base. So Aflac bases a lot. Some stocks just move that way. Okay, that's enough for the insurance companies. I'm going to move on to something that I really like, and that's retail shoes. This is On Holdings, had a nice 18% move with volume. That is a move not to be ignored. This is going to be added to our gapper list, which I'm going to briefly review in a little bit. I'm going to stretch out over the weekend and go over like 40 gappers, but this will be included. That's a big move. Now, the earnings were great, triple-digit earnings, but you can see the decelerating sales growth, and you got to ask yourself how much can it decelerate? 62, 58, 34, 23. I mean, what's it going to be next quarter? 12. I mean, but the earnings are great. You can't 123% triple-digit earnings growth is fantastic, and the market responded well, and that's all that matters. Whatever the market says, you don't want to argue with the market. Next year, 91 cents in earnings estimated. To me, this is still kind of pricey stock, 12 billion market cap, with 25 2.5 billion in sales. So I prefer Skechers and Crocs and Deckers, but congrats to the longs and On Holdings. And this thing could go higher. Definitely going to monitor this one. Did I buy this move? No, but it was near a buy point there at 35.58. So definitely not out of control. Just I think the valuation's a little rich here. Crocs made a new high today. This one is going on our ready list. Now, it built the right side of its base quickly, traded below the 50, stayed there for a long time, but Wall Street really liked the earnings report. Now, this only has 6% sales growth and 16% EPS growth, but, it's trading at an 8.5 billion market cap with, way more sales, roughly 4 billion sales. It's 2 times sales, so it's quite a bit less expensive than On Holding. So less is expected of Crocs. But I don't know. It's your own preference. To me, I prefer Crocs to On Holdings right now. And I like this base. I like the setup. Skechers, same thing. They have a lot of sales, and the market cap is 11 billion, which is 3 billion more than Crocs, but they've got massive sales. 8 billion in sales. The gapped higher on earnings, formed a little shelf pattern, is now just making higher lows, and today higher highs, $69 now. So that one looks good. And Deckers is going to report. You think of Crocs and Skechers and On Holdings has good reports. I've got to imagine these guys are going to crush it with Uggs and Hoka brand. But you just got to wait for the numbers to come in. Yeah, you just got to wait. They had $15 in earnings last quarter. Expected to earn more than $30 next year. So I don't know, 22 billion market cap. I don't know. Just got to wait for the numbers. Deckers is richly valued like On Holdings because it's delivering, bigger growth numbers. So the problem is when they don't grow and they stop growing, that's when they get their haircut. So that's where the risk comes in. So I think Crocs and Skechers are less risky, but probably less reward. Deckers and On Holdings, more risky, but probably more reward. How about that? Anyway, that's it for the shoes. I'm going to move on to a group that I haven't talked about in a long, long time. That's a cybersecurity group. I have CrowdStrike on my ready list this week. Early entry buy point for CrowdStrike was 328.50. And it just passed that today. It closed at 329.55. So to me, that was, actionable today. Still actionable. I mean, the paint by numbers is 365. I would not wait till it got way up there. They don't report earnings till June 4th. So, undercut the 50, rallied back through. And so, there's some buying interest there with CrowdStrike. GEN, this is one of our gapper stocks that I reported over the weekend. And it just continues to follow through. This is super impressive. So the Friday action, which caught our attention, was up 15% with volume there. Then Monday it comes in, follows through with a 2.3% move, and today 2.2. And you got to like that action here. And if you look at the weekly chart, you can see this is kind of a stage 1A and stage 1B basis, still trying to break out of this, kind of a stage 1 base. You can see the earnings ticking higher on Gen Digital. And the last one is Palo Alto Networks, which was the big kahuna of the group, 98 billion market cap. I mean, it still is the big kahuna, but it just, with the CEO talking out of turn at the conference call, their last earnings report, Wall Street really went sour on these guys. But I think when they report here on May 20th, I think we're going to have a different story here. You can see it undercut its 50, traded down to the 200, traded below it, found support there, and now has rallied back through a downtrending 50, and the 10 and the 21 are trending higher, and it's above the 10. So Palo Alto Networks is rebounding, folks. Don't take your eye off that one. It's a cash cow. This company is a cash cow. When you look at their cash flow, return on equity, these guys are sick. They got it going on. No debt. Yeah, great company. They changed their structure, so that kind of caused a little blip in their earnings reporting. So anyway, I don't want to get into it. Just monitor it. PSFE, another one of our gappers that we're going to have to pay attention to. This one was up 20% today with the big volume. It's a finance credit card payment stock, which we've seen a few of these recently bounce higher, due to spending, right? I mean, consumers are working, consumers are spending. So, just acknowledging this breakout from this stage 1 base. If we go to the weekly here, we can see it's just been wallowing down here for a long, long time, more than a year here. And finally it breaks out, up 24% on the week. So pay attention to PSFB, and I'll report back on this on Saturday when I do my gapper report. Okay, let's take a look at, I mentioned another one in the group, TOST. This one broke out last week when it moved 13% higher, and it's just been up every day, up, higher lows, higher highs. Thank you very much. There's nothing to do there. If you owned it before the earnings, great. If you tried to buy it afterwards, that's definitely more risk, but it's paying off for you. As the range of that day was 27.24, and now it's trading above 27. So TOST looks fantastic, and AXP is kind of the it's a big mover in this group, big heavyweight stock, 173 billion market cap, and just trending higher. So I just wanted to show, just kind of broaden out with some financials here. BFH, probably never heard of this one. Bread. I mean, if you're gonna have a finance credit card payment stock, you got to go with Bread, right? Give me the Bread financial. This is a $41 stock with less than a million average daily volume. So, less than 40 million dollar volume daily. But I just wanted to point out the this stage 1 base here that is trying to break out of, and we'll have to wait and see. The earnings line, I don't like that, but if this thing breaks out of a stage 1 base, Bread is one to watch. Made a new high today and then pulled back. What else? Oh, Schwab. Schwab is taking a lot of heat for the Thinkorswim conversion. People are really upset. Thinkorswim's not working there with Schwab. But anyway, didn't bother the stock. It traded down to the 21 and bounced more than 3% today. And Schwab was on our ready list a while back, but it's kind of moved out of a buy area. It did have this 3 weeks tight pattern and then breaking higher this week. So Schwab is just making these higher lows and finding support at the 21 consistently. Where was the last one that I had here? Oh, CFG. I think I showed this the last time I went over the banks. I kind of like this one. Just a steady Eddie, a slow mover, setting up in a base here. You know, you're probably not going to get killed here. You're not gonna make a killing or get killed. It's just kind of a slow, steady Eddie. I don't like the earnings line going south though in any stock that I own. But anyway, just wanted to point that out. All right, that's it for me, except for I lie in honor of the great Steve Jobs. One more thing. Tonight we have earnings from NU, and I have not gone over. This is a Brazilian company. I don't even know if they've reported yet. Sometimes these Brazilian companies report at oddball times. NXT reported tonight, and it's up 8%. Some of the solar names got some love from that the extra tariffs that were slapped on China, you know, that by the Biden administration today. The SunPower is up yeah, 59%. I would say that's a pretty good move, right? And I haven't even looked at in phase. Okay, 5% move or First Solar. So I digress here and should have been showing you these solar stocks that are benefiting from these tariffs. Anyway, NXT and then DELL, which I believe is another South American Uruguay based stock. So oops, it's down 17%. So I'll have more on those in the morning. I promise to look at some, just some. I'm going to quickly go over some of these gapper stocks recently and how they've been performing. This is TMDX, and I just do this because this could be the start of a, you know, multi-month, multi-quarter, multi-year run for these stocks. You know, they don't ring a bell when the stocks are buys, right? You have to notice them breaking out of bases, and every big winner, you know, formed a base and broke higher. Now TMDX has been going higher for a long time. You can see this base back here, the big move higher, another big base, and it just sold off recently, not too long ago, and then started to rally with the market and created this little flat base area and then broke out on the week of May 3 and is just trading higher. I mean, this looks fantastic. Yeah, the high on that day was 124, closed today at 132. So this thing is just making higher lows and higher highs. Something to make note of. I'm not saying these are going to be the next Apple or Amazon, but they could be big winners when they make these big moves like this. There's a reason for these big moves. Wall Street got caught off guard, and now they're buying them up, and they could be buying them up for a long period of time. They could also just, you know, have a little short cover rally and then fall out too. I'm not saying all these are going to be big winners. I'm just making note of LNTH, which made this 16% move. I'm not going to forget about it. BLBD, do I think electric buses are going to be the next Apple? No, but I'm acknowledging the move here and keeping an open mind and being flexible. Bluebird, you know, if you want to make money, you want stocks that are going higher. And so I kind of like that. I like the earnings line heading north. I like this. You know, it's a big move, and you think it's going to give some back, but it's got other ideas. Up 3% this week. So Bluebird heading in the right direction. KD, another one that I like, made a new high today. Man, broke out. And this thing is not going to be denied. It's just heading higher, up 5% today. It rallied 27% last week on the 8th. I had a pullback of one day and then just trading higher. You can see the higher lows and the higher highs. ZETA, Catherine Zeta-Jones. Oh, it's got the ants already. Okay. All these days of up days, only one down day. So it's got the David Ryan ants. Made a new high today. And in full disclosure, I bought that stock yesterday on the pullback. Yeah, yesterday. Oscar, not who cares? Who cares what I buy, really? Seriously. Oscar, this one, you know, just acknowledge the strength there. I mean, I went over this already with the insurance stocks. Couple of the restaurant stocks, Sweet Green made this big move, had an inside day yesterday, but just, you know, just acknowledge it's making higher lows here. It's not a rocket ship yet, but you know, last Friday it was up 33%, so that's a move not to be ignored. Then Bros, somebody's giving me a hard time about Bros. I don't want to get into it, but I just got to say that, you know, that their big move was on Wednesday of you know, nearly 12%. And then it kind of had an inside day, quiet day. And then Friday was upgraded at Cowan and had another big move of nearly 10%. And you know, yesterday it gave some back, right? And so people were giving me a hard time, oh, Bros is done. Well, just an inside day, made a higher low, and today another higher low and a higher high. So I don't know what you want from a stock. This one should be on a ready list. I don't like stocks that, make the right side of the base like that fast, because usually they, pull back a little bit. But 36.17 is paint by numbers buy point there, and I'm just acknowledging strength. Zim, I mean, come on, just going up every day. This is one that I was fortunate to own after the IPO, but this thing really sold off. But this is a stage one base breakout. That looks like classic stuff. And I'm just acknowledging strength here, and you never know. 36% move last week, so that's got to be it can't be ignored. GEN, I went over this one with CrowdStrike, yeah, so that one looks good as well. And then LPX, do I think LPX, OSB boards and siding are going to be the new hot thing? No, but home building is strong, and these guys are going to benefit with higher wood prices, and just they're doing well, and there's a lot of demand here. And I just got through saying I don't like when the right side of the base goes like that, and this thing just keeps going higher. Made a new high today. I wouldn't be surprised if it traded up to 100 here pretty soon. That's one heck of a move here last week, 17%, then following up two and three quarters this week. So Louisiana Pacific, kind of an old, stodgy stock, but performing well. Anyway, that's it for me today. I will have a list of, I swear, I'm going to try to keep it down to like 30, but there's 40 or more of these gappers that are just showing, they're flashing neon signs like I am flexing strength here, and flexing, and they're like a pigeon, not a pigeon, a peacock. When a peacock spreads its beautiful not flowers, wings and spreads, and yeah, peacocks around and prances. That's what these things are doing. Anyway, that's it for me. Thank you for watching. And a lot of stuff going on. The inflation data was kind of ignored today, and that's a good thing. The market's gonna handle these current rates and wants higher prices. So just get the Fed out of the way, leave things alone, and let the market do its work. Thank you for watching. We never give up.